Welcome back to the NWR Small Cap Virtual Investor Conference. I'm Tim Dorman. I'll pass you shortly across to Rob Reid, who's the CEO of MedAdvisor. This company is Australia's leading medical adherence platform, and it's becoming more and more popular with patients and pharmacy groups across Australia and around the world. Rob's been CEO since 2015, and he took MDR through from being a private company to an ASX listing. So to take us through the story, please welcome Rob Reid. Over to you, Rob.
Great, thanks, Tim. It's great to be here at the NWR Small Companies Conference and delivered virtually. So first time I've done a presentation like this. So looking forward to taking you through the MedAdvisor story. I will just share my screen. Just bear with me while I do that, and take you through MedAdvisor, which is a company that's been listed since 2015, and is a business that's really focused on making medication easier and more manageable for patients. And we've done that over the last 6 or 7 years with great success, and we'll go through some of those metrics. But essentially, our business is in 60% of Australia's pharmacies now. It's deeply integrated to the technology that operates those pharmacies, which is the dispensing systems, and that allows us to engage with end users. I'll talk through each of those elements in brief, but I did want to highlight a few of the core things that we've seen over the last 6 months at MedAdvisor, and that will help illuminate where the story has been and where it is going. So MedAdvisor makes its money essentially by offering software as a service products to pharmacy, which they then offer to a patient as a digital connection tool. We have 60% of Australia's pharmacies, as I said, and 1.3 million Australians on the platform. All of our revenue to date is coming from Australia thus far, and it comes both from the software as a service, but also user-based revenue streams. And they include transaction fees, SMS fees, and health programs fees. And what you can see here in our first half highlights is that the business is continuing to grow and grow strongly. We have operating revenue of $4.4 million, which was about a 22% underlying growth from the same half last year. Our cash receipts were up strongly, 32.5%, and our core EBITDA is also growing. So what we do at MedAdvisor is we report both core EBITDA, which is the operating earnings of the business, with the investment OPEX removed from that. And we do that to demonstrate both the operating leverage and the profitability at scale, but also to show how that is growing over time. As I mentioned at the start, where our core metrics in the Australian business continue to grow. We have just under 3,500 pharmacies, which is up strongly from the prior year. And we also have strong patient growth as well. We're now got 1.3 million people who are digitally connected through the MedAdvisor platform. And that means that they, as a patient, can track, manage, and order their medications. Our health programs, which is a methodology that we use to connect patients with the pharmaceutical manufacturer of the products that they take to help them understand the medications, understand the side effects, and how to take them safely, effectively, and on time. Those programs continued to grow during the first half of FY19. We've had early success in growing into 3 significant large markets, one being the US market, where we signed 2 critical health programs through our partnership with Adheris Health. They are a company that specializes in adherence programs in the US. They're connected through 26,000 pharmacies over there. And bearing in mind, Australia's got about 5,000 pharmacies. And we help them deliver programs and adherence programs in a digital context where they've, for the last 25 years, operated more in an analog way, so sending mail to people's houses or point of sale print. So a significant opportunity to partner with a group that's well established and deeply connected into the pharmacy market in the US to start our business there. We had our first UK client sign with us last year, which was the Day Lewis Pharmacy Group, and they're an influential chain in the UK of about 270 stores, which is really encouraging. And we also signed a joint venture with Zuellig Pharma, which is a significant business in Asia, has about $14 billion turnover, and operates in 13 countries in Southeast or in Asia, excluding China, Japan and India. The business is now fully funded to execute on our growth plans, both domestically and internationally. And at the end of last year, we raised $17 million in an underwritten capital raise that was underwritten by a company called HMS Holdings, a NASDAQ-listed company based in Texas, who has become a strategic investor in MedAdvisor. So why were they interested in the business? Well, they specialise in working with health insurers in the US and payers and pharmacy benefit managers over there, and manage a lot of data for patients and run patient intervention programs and patient support programs and a range of services to those health insurers. They're also the largest funder to the Digital Health CRC here in Australia, which is a cooperative research centre funded half by the federal government and half by industry. And they've been very, very interested in Australian technology that they can help support and also bring into the US. We appointed a new chairman very recently, and also strengthened the board with Jeff Sherman, who joined us as a non-exec director, who was treasurer or is treasurer of HMS. So we feel really well placed to go and execute our plans. We've also added to our executive team over the last half and appointed Steve Watt as our Chief Revenue Officer, and earlier in the half we appointed Simon Glover as new CFO. So just in terms of overview, we turned over about 4.4 million, 4.5 total revenue, and with a core EBITDA of just under 1.4 million. As you can see there, a strong gross margin of 87%. The operating leverage you can see start to come as that gross margin continues to grow. And you can see the expense line there is a combination of both international expense and growth OPEX to support that international business and also the domestic business here in Australia. The core driver metrics I mentioned at the start, 63% of our business comes from software as a service, and we continue to grow that. Our software as a service is growing both in terms of the number of pharmacies that we are contracting with and supporting. We now have 3 of the top 4 pharmacy groups in Australia under long-term contracts, and we also have seen over the last 3 years significant growth in our monthly subscription fee, which has gone from an average of under $80, now tracking at around $140, $150 Australian and per month per pharmacy. So we've seen significant ability to increase that, both as the breadth of the product has expanded, but also as pharmacies have begun to realise the value that it builds to their business. And our churn has continued to, over the long term, track around 3%, which has been a good number, and anything under 5% we think is a good number. So as I mentioned at the start, what we are all about here at MedAdvisor is helping the way patients can manage their medication, empowering them to feel in control. We do that through a multitude of ways, which I'll touch on. The core issue of what we address here at MedAdvisor is making medication easier to understand, because there's a massive problem with medication non-adherence. In the US, the government estimates that it costs the lives of 120,000 people a year not taking their medication correctly. In Australia, we see data that suggests chronic medication, and this is a study we ran over more than 1 million patients, showed 54% adherence to medication. So meaning The doctor has said, please take 2 pills per day. And on average, people take a little over 1 pill per day. So it's very specific to what the doctor has asked you to do, yet and still people are taking less than they should for a range of reasons. And that can really be, I've forgotten, it can also lead to more direct reasons. I've got side effects, I've got issues with taking medication or disease or psychological barriers to why people don't take it, cost even. And we can help the industry support that. So we have products that work through from a patient lens, which is really a core app, which helps people track, manage and order their medications. It also helps people now pay for their medications. So they can pay in advance for their medication, and we will of course take a merchant service fee and a margin on that. And as recently as last week, we announced that we're also accelerating the delivery of those medications through our third-party partnership with King's Transport. And that will also give us an opportunity to take another transaction fee. But importantly, we give the patients the reminders. The reminder, it's now time to take this medication. Here's some important information that you need to understand about your medication. Now it's time to order it, and now it's time to go and see your doctor. So by doing that, we've seen adherence lift up to about 20% is not uncommon to see improvements of. And that has a very direct benefit to the pharmacy, who is obviously seeing increased revenue, increased store visits, but also to the pharma companies and also to the health system more broadly. And the costs associated with medication non-adherence are considerable. From a pharma company perspective, what do they get? Well, they get the opportunity for the first time in the Australian context at least, to connect with people via MedAdvisor who are on their medication, because they know all the reasons why people are not taking their medication, but they've had limited ways in which they could influence patient behaviour or patient understanding. We know in Australia that health literacy is only 41%, which is a terrible statistic when you think that the whole health industry is built on people understanding what a doctor or a pharmacist has told them. And if they're not fully comprehending it, it's no wonder the adherence levels are at 54%. From a doctor and pharmacy perspective, what we provide is workflow efficiency and a way to connect with their patients. And that's efficiency in the way they process and handle scripts, efficiency in the way they communicate with their patients. And that gives them more time. And those workflow improvements help them focus on the patients that need it most. So broadly in the industry, there are lots of different challenges, and these exist globally. So they're not unique to Australia, but you are seeing funding model change, people paying for outcomes in lots of different markets, competitors coming in, your Amazons buying pill pack and online pharmacies as a threat to the traditional models. And patients' demands and expectations are shifting as they are shoppers in the online world. And those drivers all give us very direct opportunities to help and support patients as they go through the system. Because of time, we won't go through every slide in too much detail. So basically, our platform has been built to be globally extensible. We're launching off a very strong base here in Australia with a very significant pharmacy presence, very significant partnerships, and significant amount of activity from pharma companies who want to and have seen direct benefits from educating patients on how to take their medication safely, or what they describe as quality use of medicines. So those customers are also the same sort of customers that we would operate on a global scale. As I mentioned, adherence is much stronger through the Australian platform. We also see over half of the orders come when the shop's closed. So you start to see, from a pharmacy perspective, the workflow efficiency that can drive for patients. They can come in when the shop's closed and dispense and make sure when that patient walks in, well, they've got an opportunity now to talk to them and engage with them and build loyalty, or consult to them about their medications that they have. We're also seeing in the COVID world that this platform, which we call +1 in the pharmacy, also allows them to be very directly communicating with patients. And that's becoming more and more important as they manage their supply chain, which has been disrupted by COVID, and the fact that patients aren't meant to be coming in, and most recently, over 70-year-olds virtually being ordered to stay at home. 60% of our user base is over 60% from a patient perspective, so that is a cohort that would be directly impacted by COVID. So these digital health technologies help enable them to get their medication supply appropriately. Internationally, we've had a very strong 12 months, and as I mentioned at the start, we've partnered with Adheris Health in the US. We also had a significant investment from HMS, which is really important because they have a significant patient population for which they have very good medication data on, and in many cases, the ability to reach out to those patients for health programs, like I described earlier. In the UK, we have the first agreement with Day Lewis Pharmacy, and that's been really exciting. We're looking to launch our first beta version of that product in April, and then full rollout in June, July. And NPA, who is the National Pharmacy Association, a couple of weeks ago came out and endorsed MedAdvisor as the platform for UK pharmacy, which is a huge endorsement for us. And we're really, really excited by that. So we're working heavily with the NPA to ensure that their customer base, their 6,000 plus pharmacies that they represent, can start to access the MedAdvisor software over the coming 12 months or so. As I mentioned, in Asia, we have the partnership with Zuellig Pharma, who is a significant entity, but we've now been able to start to do some deals in the Philippines through MedExpress, and in Malaysia through some partnerships with some software companies and a pharmacy group, to start to reach wider patient populations, which is really exciting for us. I won't go too far into the US other than to say that we've, under the Adheris partnership, we've partnered with a pharma company to do a digital adherence program, and to put it in context, last year we did about $1 million in health programs revenue, and this represents about 80% of that in a pilot program for the US, and this is intending to operate through 4,000 of Adheris's pharmacy network, not the 26,000 pharmacies, and we think it's a really exciting opportunity for us to demonstrate the scale benefits of the US market, and to have 2 pharma companies now, and 2 top 10 global pharma companies start to work with us in that market, and we'll look to expand that over the next short and medium term. As I mentioned at the start, HMS are our new largest shareholder, and they were scaled back from the underwritten portion of the capital raise last year back to 11 million as we had institutional demand, which we accommodated as part of that capital raise. We feel that there's some significant opportunities for us to partner with HMS into the future, to work not only through the pharmacy channel via Adheris, but to also work through the health insurer market through HMS as a phase 2 for our US business. So that's really exciting to have that, and have an investor of the caliber of HMS take such a significant position in our business. As I alluded to, our US market entry strategy is evolving evolution. It's the Adheris Health partnership to start with digital adherence programs, moving into working with HMS for health insurers, but also to go direct. And where those opportunities present themselves, to put in our ordering app or our pharmacy software into pharmacies in the US, whether they be small to medium-sized chains or whether they be independents. which we think is going to be really important. So we've got 3 very credible legs to our strategy, and we'll be working on those systematically over the next short and medium term, and we're excited to have key players supporting us in that. UK, I've talked about both Day Lewis Direct and being endorsed by the NPA. The NPA are supporting us drive digital adherence programs as well, and they're very focused on building adherence through the platforms and through their pharmacies. So to have MedAdvisor as their key technology in order to deliver that is a really exciting proposition. And that really supports our UK entry strategy, which is about going direct and with this partnership to ultimately get to a position where we're also running digital health programs in the UK market. And Asia, just briefly, we've signed up our first pharmacy chain in MedExpress. That should go live in Q4 this quarter. And that's really exciting through MedExpress. And we have some digital adherence program opportunities to start through Clinify and all pro pharmacies in Malaysia. So, as I mentioned, the Zuellig partnership, they operate in 13 markets. They also have a very significant business in 8 of them, and this joint venture covers those 8 markets, and will focus more heavily on the Philippines and Malaysia initially, and then move to other markets as we become acclimatized to operating in that market. But Zuellig have been a terrific partner so far. We've been really pleased to join with their 100 years of history operating there. Zuellig is a private company. They've been owned by the Swiss, and they are a very reputable business, and to be able to leverage their goodwill and their sales infrastructure, I think is a huge advantage for us, and probably makes the Asian market accessible where perhaps it may not have been accessible. I won't go through the financial results because I summarised those at the beginning, but I did want to just also touch on the COVID crisis at the moment, and what is MedAdvisor doing. I don't have slides specifically to talk to this in the time that we've got left, but we've recently made announcements that we are accelerating our rollout of delivery, and that is to support the federal government's $25 million that they've put into home delivery of medication. We've also seen significant uplift in the amount of orders going through our platform, and that has been as people are staying at home, they're not going to the pharmacy directly, so they're ordering their medications through our platform. Our new pay in advance is actually extending much faster than we anticipated it would. The number of pharmacies that have opted in for pay in advance has grown from about 15% to about 70% over this last few weeks, which is much faster than we'd expected. And the patients we're starting to see use that more and more regularly. So that gives us a nice opportunity. And also we have opportunities to support digital health and digital telehealth as well through the platform. So we're excited to be able to use our tools for the benefit of people in the vulnerable population that is at home. And so certainly from my perspective, I'm very proud to be able to leverage this technology to help in a crisis. And I think it's exactly what Australians need when they're seeing massive stockpiling of medications and stockpiling of other staples. Look, it is one thing to run out of toilet paper, but it's another thing to run out of medication. So from our perspective, we're really keen to help pharmacies manage that supply chain, and our software can help do it. So I'm conscious of time, and I've probably run over, so I will hand back over to Tim, and thank you all very much for listening.
All right, thanks very much, Rob, for taking us through the story, and thanks also to everyone at home for tuning in. So from my perspective, there's clearly tangible benefits here for patients and pharmacies and big pharma and for the health system more broadly. And what I can see is that network effect that Rob spoke about really reinforces the value proposition, especially in a COVID world. So it's an exciting time to look at MDR now as it's executing its expansion plans in the US, UK, Asia, and also here in Australia. So if anyone's got any questions for Rob, encourage you to head to medadvisor.com.au, or you can send them through to tim@nwrcommunications.com.au, and we'll follow you up that way. Thanks again, Rob, and thanks everyone.
Absolute pleasure. Thanks, Tim.